Welcome everybody to this short video, and we are covering the topic of trend exhaustion, a really important topic irrespective of whether you're already in open trades or looking for potential new trend movements. Knowing how to recognize when a trend is running out of steam is a vital skill that you must develop, and I hope this video will give you some guidance as to how to do that. Let's start by defining what we mean by trend exhaustion, which is the point at which an existing trend begins to lose strength, begins also to lose a bit of momentum, and consequently, of course, market participants start to move away from that particular price move. It often happens before a reversal occurs, but also can be simply a sign that we're just going to go into a period of congestion. So early recognition is beneficial, as if you're in a trade, it could be a good time to scale out, to exit completely, or tighten stops. If you're not in a trade, it could be that early signal to start preparing for a reversal setup. Either way, it's a good thing to be aware of. And we have some key signs that we want to go through today that may give you that big clue that suggests trend exhaustion is in play. So let's start by asking the question, what does this mean to you as a trader? Well, it can protect profits when a trend fades. If you're already in a long trade, for example, and we're at the end of that, the sooner you can get out, the better, really, if you want to retain most of those profits and not donate them back to the market. It often precedes structure shifts, either, as we've already said, into a sideways trend or congestion, or indeed a potential reversal. If you see the signs, it helps you being that poor trader who is the last in the room just before it changes and goes in a different direction, of course. And should you see it as being worthwhile as a precursor to a potential reversal, can put you in the right place to confidently have all the ducks in a row to suggest that now could be the time. So I said we we're going to look at various signs. So the first we're going to talk about is what are termed climactic candles. And these are a series of wide-ranging bars near the end of the move. Often what we see is late-stage buying, those traders who are just so terrified of missing out on a key move that they ignore other things going on the chart. And of course, that's offset by enthusiastic selling for those who recognize the signs that there may be a trend exhaustion in play. Think of it like the final sprint before a collapse as you move through the finishing line. Sign two is a failed breakout, where price breaks a key level, perhaps a previous swing high, but fails to hold or continue that move to the upside or downside, of course, if it's at the end of a downwards trend. It is a significant trap for late entrants, and this wick breach that we often see before the candle moves back beneath that key level is a key signal that the trend couldn't attract any new market participation in that direction. The reality is, if any breakout doesn't follow through and the price collapses back into the range, so the candle close is always the most important part of the candle because it is a sign of mature market sentiment, then this is a major red flag that a trend is exhausting. Sign three is momentum loss. On a chart, you may see smaller candles, overlapping wicks, and the MACD signal line may cross the histogram. And what we're seeing here is potentially the market pausing for breath. And if the buyers or sellers don't step in at this point, direction can shift, depending, of course, on whether you're looking at a upwards or downwards trend. Sign four is volume increase with no follow through, where we often get a volume bar spiking beneath a candle that doesn't make any price progress. We've talked before about the importance of volume to confirm a move through a key level. But if we get that beforehand, it could be institutions selling into strength or buying into weakness if it's at the end of a downwards trend. And we're seeing price fall despite the volume. This is a subtle but powerful sign of exhaustion. Sign five is repeated tests of the same price level. When you have multiple tests with a failure to break out, it's a suggestion, even more so than just a single price level, of weakening buying or selling pressure if at the end of a downtrend. Each touch that fails to break that same level increases the chance of a fade into a period of congestion or a flip. Let's just have a look at a couple of charts to show you what this looks like in practice. Let's start by looking at a gold chart here. You can see there was a move to the upside following this bounce off a key support level. And you can see at the end of this trend to the upside, we get 1, 2, 3, 4, 5, 6 wicks out of 7, testing this key level at 3328. That's your key warning sign. We also see that big candle at the end of that before we go into smaller and overlapping candles with a little bit of extra volume. And then, of course, we see the MACD signal line crossing the histogram to confirm that this is potentially done. We can also see very similar price action here, where we had this uptrend, some significantly strong candles towards the back end of that before we lost all momentum, a failure to breach this swing high with this wick here before the candle body closed at the bottom of that. And then, of course, we moved into downtrend. Once again, we saw that momentum shift with the MACD signal line closing over the histogram around this area here, just confirming that that is done. Let's look at another chart, perhaps the Aussie USD. Here we've got a double bottom formation, potential entry to the upside, and then, of course, a series of wicks at a key level, suggesting that that momentum isn't going to continue. Once again, we see a big candle to the upside where people think it might be moving to the upside, but fails to do so. And one last one, let's look at the Aussie yen. Let's look at this current price action here. You can see there, small uptrend at the back of the US session on Friday with smaller bodies, a failure to breach a level here. And ultimately, what we saw is that momentum gone. And that would have been the time to say, right, thank you very much. Let's take our profit and go. So those 5 signs being covered, let's look at your potential trading actions. Should you see trend exhaustion occurring? Well, first of all, let's assume you're in an open trade. Your choices are clear. You can either tighten your trail or exit on set criteria. So you've got a decision to make when looking at those 5 potential signs as to which ones you're going to integrate into your trading plan and what the subsequent action is. Let me give you an example. It may be that if 2 of these are in place, that's a signal to tighten a trail stop. Or if more than 3 are in place, or 4 or 5, then that may be a sign to exit immediately. You need to make that decision for yourself, but just to give you an example on why knowing these signs is critical. You've always got the psychological challenge of what if. Fear of missing out, or FOMO, is one of the key failings of many traders. So there may be a delay in exiting the trend, which is showing clear signs of exhaustion, just in case the price action continues to move up. If you have a trend continuation strategy in place, which we covered in a previous video, then of course you're well prepared for that move. You can bank the profit as that sign of exhaustion occurs and then be ready to go, irrespective of whether there's a trend continuation or, of course, having a reversal strategy in place also can help you benefit in a flip in the other direction. So your mission is clear. Have a look at what you've been doing so far, perhaps some previous trades in light of the information covered and those signs that we've given some information on. Ask yourself, is there any way I can refine what I'm doing now to potentially create better outcomes? And there's nothing like seeing how your results may have changed positively on previous trades to give you the motivation to do this. And of course, subsequently, you need to articulate what you're going to do and when you're going to do it in your trading plan. This is critical and is the case with any strategy. I hope that's been useful and given you some interesting things to reflect on in your trading. Trade safe and see you again soon. Bye bye for now.